Have you ever noticed how in Indian cities, if you leave home in the morning, by evening there is a brand new barricade on the road and a huge board that proudly says work in progress? We complain about the traffic jams, dust, and the diversions, but secretly we are amazed at how fast our cities are being stitched together with the tunnels, bridges, and flyovers. The truth is, while we are stuck honking in traffic, some companies are quietly laying the foundation for the next 20 years of urban life. Today, we will look at one such company that has made a business out of digging below, building above, and somehow keeping our cities moving forward. I am CS Sebi George. Welcome to my channel. Today, I am introducing a company called J. Kumar Infra Projects Limited, which is best known for metro rail, flyovers, and urban infra, while also handling tunneling, bridges, and water projects. Let us look into the sales figures for the last 3 years. From financial year 2022 to financial year 2025, J. Kumar's sales have shown a consistent upward trend. Revenue grew from 3,527 crore in financial year 2022 to 5,693 crores in financial year 2025, delivering a healthy CAGR of nearly 17%. Importantly, the growth has been consistent each year. 19% in financial year 2023 and 16% in financial year 2024 and another 17% in financial year 2025. This consistency reflects strong project execution and a robust order book of rupees 25,000 crores, which is roughly 5 times the last year's turnover, giving confidence that company's top-line momentum is sustainable. Moving on to the net profit. From financial year 2022 to financial year 2025, Jacoma's profit after tax has almost doubled, rising from 206 crores to 390 crores. That works out an impressive CAGR of around 24%. Importantly, the growth has been consistent. 274 crores in financial year 2023 and 329 in 24 and another jump to 390 crores in financial year 2025. This steady profitability trend shows that the company isn't just winning the orders but also executing them efficiently and converting the revenues into healthy bottom line growth. Let us check what the big boys think about the Jaykumar Infra. Over the last 3 years, the institutional holding in Jaykumar has shown an interesting trend. Foreign institutional investors' holding has steadily climbed from 9.7% in September 22 to 12.6% by June 25. This indicates the growing foreign investor confidence in the company. On the other hand, DAI holding initially rose sharply, peaking at around 16.9% in mid 2024, but has slightly down to 15.4% in June 2025. Overall, the picture suggests that while domestic institutions have booked some profits, foreign investors have been steadily increasing their exposure, keeping the institutional interest in the stock quite strong. The promoter holding is steady at 46.64% for the last 3 years. From financial year 22 to 25, Jacoma's profit after tax and operating cash flows show a mixed relationship. In FY22, the cash flow from operation was much stronger than the reported profits, reflecting the efficient project collections. But in financial year 2023, the cash from operation dropped sharply to 183 crores, while the profit after tax rose to 274 crore, indicating the delays in receivables and the tighter working capital. The trend improved in financial year 2024 and the financial year 25, with the cash from operation once again moving closer to the profit levels at 339 crores and 376 crores. Overall, the chart shows that while profits are steadily growing, the company must keep strengthening its cash conversion to ensure the consistent liquidity. The company's operating profit margin has stayed remarkably steady in the 14-15 range over the past 4 years. This consistency highlights the disciplined project execution and the cost control despite the fluctuations in revenue. Jacoma's stock trades at a PE of 12. This is well below the broader infrastructure average. Lower PE suggests that the market is still pricing Jacomar conservatively, possibly due to its small cap size, working capital pressures, and execution risk. On the flip side, this valuation leaves room for the PE re-rating if the company continues to deliver the steady growth in the sales, profit, and cash flows. Jaykumar has maintained a steady dividend payout over the last 4 years, rising from rupees 3 in 22 to rupees 4 in financial year 24 and 25. At the current levels, the dividend yield works out roughly 0.6%, which is modest compared to the broader market averages. This shows the company prefers to retain most of its earnings for project execution and growth, while still rewarding the shareholders with a consistent payout. Looking ahead, J. Kumar Infra Projects has a fairly visible growth runway. The company today carries an order book of over 25,000 crores, which provides 3 to 4 years of assured revenue. On top of that, its active bidding pipeline, valued at nearly 20,000 crores, means there is a strong possibility of further order inflows in the near term. One of the biggest advantages Jecumar enjoys is its specialization in metro projects. Unlike many mid-sized EPC players, Jecumar has the capacity or the capability to execute both the elevated and the underground metro works. With several Indian cities from Mumbai and Delhi to Tier 2 hubs expanding their metro networks, this niche capability places the company in a sweet spot. Urban infrastructure remains another major opportunity. Flyovers, bridges, coastal roads, and skywalks will continue to be needed as Indian cities expand. In fact, Mumbai alone has multiple phases of metro expansion and large scale road projects in the pipeline, ensuring the sustained opportunities for the company. From a policy perspective, the government's push for the infrastructure, reflected in the 11 lakh crore allocation in the latest union budget, provides a broad tailwind. Metro rail expansion and smart city initiatives directly align with Jacoma's skill set, which could support the growth for the next several years. That said, the company must continue to strengthen its financial discipline. While profits are growing steadily, operating cash flows have sometimes lagged behind the profit after tax due to delays in receivables. Maintaining margin consistency and improving the cash conversion will be crucial. Execution quality also needs attention, as past penalties show any lapse can hurt the reputation and the profitability. Overall, the future of Jacomar looks stable and growth oriented. With its strong order book, technical expertise in metros, and alignment with India's infrastructure pipeline, the company is well placed to ride the infra boom of the next 3 to 5 years, provided it keeps the execution tight and the finances healthy. Thanks. That's all for today. If you like the video, please like, comment, and subscribe. Until we meet next again with another video. Goodbye.